All right, we are live. Hi everyone. Thank you for tuning in. I'm Duke Banerjee, and I'll be the host for the day. I'm part of the analytics team of Peak Blockchain, and we as a company conduct agile end-to-end blockchain research and offer custom research services, data analysis, and reporting, as well as data consulting services. Today, as we are here to know all about the merge, and we'll talk about the merge and what it's about, and how it will impact the investors, the developers, and other layer associated to the chain. We would also have a Q&A session at the end, so please stick around to put up the questions. We'll address them one by one. Okay, enough talk. Now let's bring Harsh Agarwal. Harsh Agarwal, who is our expert, who will deep dive into this topic. He has been an integral part of our team and has been studying the blockchain market for quite some time. He has recently published an article on the merge decoded. Uh, so, Harsh, welcome to the podcast.
Hi Duke. So I'm very excited to be part of this podcast and wanted to demystifying the fact like the FOMO is being created over the Ethereum merge and wanted to talk more about how the effects, pros and cons about the merge, how everything is going in this industry and what are the impacts and what are the things we should look into this thing. So it's a great time that we are discussing this thing so that our users, our stakeholder would be knowing this thing is happening or this thing we should do and this thing we should be just to stay away from this all sort of thing.
Absolutely, the right time to talk about it. So Harsh, let's get started right to the point. Let's tell our viewers what is this merge? Why such buzz around this? What is this Ethereum merge,
Sure,
according to
Duke.
you? Yeah.
So, the Ethereum merge, it is the most significant upgrade in the history of Ethereum blockchain. So it means like it is being transitioned from the proof of work consensus mechanism to proof of stake consensus mechanism. So it's not like it's been happening from a day or from a month. So the developers of Ethereum are been preparing it for more than 2 years. So there's a concept called beacon chain. So in from December 2020, so they have established the beacon chain parallel to the Ethereum main chain, and they are being testing this thing twice or thrice in the production environment. So they're doing multiple sorts of runs and they are seeing whether they are compatible to do so. So it's not like a one day effort. So there's been a year effort. So they are doing so. So the merge will happen around September 13 to September 14th, like you can
Mm.
say 3 days or 4 days from now. And the thing is, they have set a difficulty mark. Once that difficulty mark hits, the beacon chain will transition or the merge with the Ethereum mainnet as the consensus layer. Means beacon chain has a consensus layer, so it will
Mm.
merge with the Ethereum main chain and continually POS chain will work going forward. So this is the merge and where we have the same account balances and network history, other sorts of balances. So everything will be intact, everything will be like copy and paste it to the new chain, and it would be like minor secure chain to the validator secure chain. So this is the merge that is happening, and hopefully this is a good step in this era just to go more into the POS world.
Absolutely exciting times. But I'll just take one step back, Harsh. I just wanted for me as well as our audience to understand what's the need of this transition from proof of work to proof of stake, and what are the benefits associated with it, and why Ethereum has decided to move towards that.
So, so for understanding this thing, we have to go a little bit past. So in 2016, Ethereum got hacked by like there is a DAO hack that happened over the Ethereum chain. After that, there was a we get the Ethereum Classic and Ethereum Ethereum, and then there's a born of new Ethereum. And after that thing happened, the developer team and the founder of Ethereum is a die-hard core fan of POS, because they understand the like issues they are facing or they could face in future if they stick to the POS chain. So it's not like the one day planning. So they have been planning from the way 2016. So I'll tell you the what they think about why they are shifting from scratch. So
Hmm.
they believe that in POW we use SX, and after SX we have option to use GPUs. What happens? So let's say you are
Hmm.
using SX to mine, okay, then you suffered some attacks. Then
Hmm.
what you can do? You should do like you should change the algorithm of that POO chain, and you will again start working on the POW thing. But ethics SX industry is more than 20 billion to 50 billion industry. You can't replace all those SX. So there are
Hmm.
millions of people who are mining from SX. What will happen if you suffered the second attack? So in the first attack you're using the SX. So in the if suppose you get the second attack, you will be shifting to the GPU based mining that the Ethereum currently has been doing. But if we come to POS thing, so let's say you got a 51% attack or some sort of attack, then
Hmm.
you there's a concept of slashing there. So in slashing, what happens? They will the mechanism automatically burn the users coins at the large share of users coins. So user ultimately the attacker or the hacker had to suffer. Or there's a one more option of USF, that means the minority user activated soft fork. In this concept, there's a consortium of a small bunch of peoples and miners. They they will easily destroy the large proportion of user fund who are involved in malicious activities, rather than leaking this thing through whole out the community. So this thing has been praised for quite long time to the Ethereum developer community. And there's
Hmm.
one more advantage if we talk about from environment point of view. So currently
Hmm.
in the POW mechanism in Ethereum is currently using 112 terawatt per year of energy, but they are committing that it will get reduced by 99.95% to 0.01 terawatt per hour, sorry, per year. So
Wow.
to make a greener block concept of a greener blockchain, and to make it ESG compliance, to dismantle all the rumors or to dismantle the regulatory concerns. As you know, like last month only, that UK House of Energy Committee have questioned the publicly listed miner about what sort of energy consumption, what are their energy mix, what's from what sources they are getting energy, what types of coins they are mining, and bunch of questions. So
Hmm.
government is planning to do like planning to mitigate this thing. They wanted to minimize the carbon footprint. So their US government have an agenda to control the GHG population by 50% in 2030, but and to mitigate it to the net zero by 2050. So
Hmm.
this is also a thing we should look on. So there are multiple narratives for to shifting from proof of work to proof of stake.
Hmm. So these are
There are
the
some concerns in PO. It's
yeah.
not like you have to see other trade-off also.
Hmm. Yeah, so these were the benefits you spoke of, right? So I was also interested to know about the risk and the the downside. Yeah, Harsh, I was saying that you talked about the benefits, right, of this transition. So just shed some light on the downside of this. You told about there might be some regulation effects and all those stuff. So can you just shed some light on that?
Sorry, Duke, I'm unable.
I think there's some technical difficulty. Uh, Let me just check with Harsh. Oh, okay, great. Is
There was
Harsh, you're
network
back?
trouble. Yeah, sure.
No problem, no problem. So, Harsh, let's get back to that question which we were talking about. So, you just explained our listeners about the benefits, right, of this transition, the energy consumption, the security, all those sections. But talk about the downside of that, the risk involved.
Sure. So there's a
I think we lost Harsh again. Yeah,
yeah.
Harsh, you're back.
I don't know what is happening with the network. Yeah. So there's a concept that is running around that's called social slashing. So I'll tell you. I will
Hmm.
start with the foundation. What how this thing is building up in the environment. So I want to talk about the beacon chain. So currently,
Hmm.
there is more than 13.2 million of Ethereum has been staked, and this is shocking to
Hmm.
know that more than 65% of Ethereum supply has been staked by the centralized companies like Lido Finance, Coinbase, Kraken, Binance, and stuff like that. But the thing here is going on is like we have seen the tornado cash effect. It take a day to dismantle everything from the web, like from the website to the source code till to the to like jailing the developer. Like he has been is
Hmm.
in jail. So what if there has been control, like centralized company has been controlling the state? What if situation?
I think there's some major internet issue. Yeah. Yeah, Harsh.
Yes,
Is it
so don't
okay?
know what is happening with the. Yeah, yeah, this is okay.
All
Sure,
right. Okay. Please continue.
sure. So yeah, so the thing is really we are the centralized validator who will be validating the Ethereum transaction, and
Hmm.
we will not know what happens in future. So
Hmm.
currently we are facing some front end, you can say front end abolition or front end regulation means the governments are blocking users addresses, governments are avoiding users to do transaction with those addresses or those websites. But what if they try to uh, go more deeper in the blockchain? They wanted to stop the production of the block, they wanted to change the order, they wanted to do some sort of other sort of activities that may
Hmm.
affect the fundamental pillars of the blockchain, that is censorship, persistence, immutability, decentralization. Then who what was the narrative behind 200 billion decentralized blockchain? Who gonna guarantee this thing? So this thing is really shocking. We should really consider this thing, like how this we can evolve this thing. Even the developer also understand this concept. And I'll talk one more narrative here, that I already talked that 65% of the total stake supply, that is 13.4 supply.
Hmm.
If we convert it to today's number, it's around 15 billion to 18 billion. What
Hmm.
if post merge some malicious activity happened from them, or maybe some of the centralized validator got hacked? We're gonna guarantee those funds, because in proof of stake there's a concept called slashing, and in slashing
Hmm.
their fund will get freezed, and they will automatically burned out. So it's not their fund, so they have staked on behalf of the consumers.
Hmm.
So this concern really, we should understand those concerns, because no one is talking about things. I'll talk to you more about all those things. Like there is a 99 or 95% chance that there will be hard fork, and from the hard fork ETHW coin will be produced. So this hard fork has been supported by Tron founders. So in hard fork, that would be after a week of the merge. What happens? No, they will create a separate chain,
Hmm.
and there are speculations going on that Pulse or will use the same chain ID.
Hmm.
dupe users. You know,
All right.
to dupe, yeah, to dupe users. So what happens? No, they will it will help in relaying the transactions. Some transaction is been producing on other chain and some validating on other chain, and who gonna guarantee fund? So there might be scenario of siphoning of attacks, attack. There might be situation that we would face. We have to all answer all these things. We have to be vigilant about all the issues that could happen or they not happen. Okay.
I think as we progress, towards this merge and beyond, slowly, we'll get those regulations set and we'll get those clarity. Right now, there's a lot of questions, arising, especially which you mentioned, about uh, uh, shifting from more decentralized to centralized. This is a common question which is arising in everyone's head, because as you said, it's the basic pillar of the blockchain network. If everything becomes centralized, then what's the whole point, right? uh, Beacon chain, as you said, can you just shed some light on that beacon chain, and what's happening? What can you tell us about the depositors, on that aspect?
So, there's been currently more than 425 validator over the beacon chain, and there's been more than 13.6 millions of Ethereum locked. That would be around 11.4% of the supply. I've already told you about that has been more than 65% has been staked by the centralized company. Now I'll
Hmm.
talk about the reward structure, what is happening over the thing. If we compare with proof of work thing, the here the mining cost is used. So to reward to compensate the miners, there is a network issuance rate, means
Hmm.
how much Ethereum has been issued on a daily basis or like on a block basis. So if so, the rate is fluctuating around 4.3%, 4.35 or 4.2. Around, if you take an average, it would be around 4.3%. That would come to
Hmm.
13,000 Ethereum per day, because
Hmm.
because the miners use more energy and they would be requiring a good number to compensate. And
Hmm.
we are seeing the electricity prices are going on and on. So this thing
Hmm.
is, but if you compare this thing from the to POS thing, here the energy
Hmm.
cost has been reduced by 99%. So still they don't want to pay the same thing. They don't want to maintain the same issuance rate. So here the issuance rate has also been dropping by 90%, 88 to 9 to 0.4 0.50 per year. That could be around 1600 Ethereum per day. So the this move is to make Ethereum deflationary, so that more buying pressure would happen because the supply is going down. Supply would be scarce, so that more and more people will jump on Ethereum, hold Ethereum, stake Ethereum. And I'll
Hmm.
talk about the EIP 1559 that applied after the London hard fork that happened in August. Sorry, in August 2021. So it, it is working as a cherry on cake over this concept. What it does, it burns the base fee, that is a minimum fees, do a transaction. So in a transaction there are two types of fees that you are paying. One is the minimum fees,
Hmm.
and other, you can call it a tip or a tip fees, that you are in paying an extra over the minimum fees to get your transaction fast, or to process to get your transaction processed fast. So
Hmm.
so there's a burning rate that is also going. So if you consider this thing, so it's also decreasing, it's creating this Ethereum supply stat on the I can say deflationary side of things. So this thing is a good thing that is.
Hmm. Harsh, yeah. So Harsh, also, you talked about the 13 million, around 13 million, have been staked. Ethereum have been staked. So what will happen to them once this merge happens? So the general concern is that. I think we have lost Harsh again. Yeah, Harsh. Hope you're back. So I was asking you about, you talked about around 13 million Ethereum had been staked, and the general concern is what will happen to them after the merge completes. Where will it all go?
So yeah, that's a very hot question that like that most of the investors are asking what would be with the coins that is currently at the beacon chain. So those coins will get unlocked, but not now through an software update that
Hmm.
is currently termed as the Shanghai upgrade. So it
Hmm.
will maybe happen after 6 months or maybe happen after a year. So what happens? Currently after the merge they will start working on the Shanghai upgrade, and they will formulate a way how the you can say the unlocking mechanism will work. But if we see as per the current research reports and the current releases they have the from released from the developer community, they are saying that we won't be unlocking all the deposit at a certain time, so they are limiting the unlock. So
Hmm.
as per
Hmm.
the current information available for to us, so they have planned to unlock as 6 validator may exit per the epoch. That could be around 43,200 per 10 million. Or if we are seeing the rate at which the staking is happening, and if we consider the reward rate, that could be jump to around 7% to 8% post merge. So if we come with the number that could lead us within a year, we would be seeing more than 25 million to 30 million Ethereum has been staked over the beacon chain. That could turn up unlock of 129k Ethereum per day. And if we see the issuance amount, that would be adding 2800 Ethereum per day on the issuance basis. So it's come to 132k. That is more than 10 times if we compare with the current PO structure in where 13k Ethereum has been issued. So it's not like every all the staked coin will be unlocked, but there is an equilibrium level. There is a trade-off that the stakers and the investors and the fund managers they will maintain, because as soon as the number will increase from staking number, currently we are at 13, we expect
Hmm.
post merge the reward rate will be around 7% to 8%. But what if that we reach the 30 million mark, then what would be the reward rate? So not they will maintain this, they the reward rate will automatically decrease, because if something is getting more and more popular, and then the thing and then the reward structure get uh, has a complete reverse effect. So if
Correct.
we consider it as 30 million, then the reward rate will drop from 8% to 3.3 to 4%. So that will demotivates people or the funds who has staked or who has leveraged the positions to stake in the beacon chain. They have other alternatives available in DeFi space. If you talk about other chains, other stable coins, they're offering much more API, talking about 7%, 10%. They have other ways. It's not
Hmm.
like, so that could be a chain effect that could happen after the Shanghai upgrade. So it's a time, not like we should panic, and but we should also prepare strategy if we are into this thing for long term. This thing is not rewarding the luring rewards for the years to go and the decades to go. So we have to see the trade off.
Absolutely. Uh, Interestingly, so what I'm feeling, seeing the sentiments is the layer two chains are a little concerned on what's happening if Ethereum is getting upgraded into it in such an efficient manner. So what is the future of these layer two players?
So
What's your thoughts on that?
so not exactly with the layer 2. I'll talk this thing with layer 1 also. So there are more popular layer 1 coins. I talk about Solana, Polkadot, Avalanche, and if you talk about popular layer 2 coins like Polygon, Optimism, Arbitrum, so it's not like they not gonna survive,
Hmm.
because the current major issue is the high gas fees and the low TPS. So, and these projects are addressing all those things. Not exactly, but they are addressing. Someone has high TPS, someone is attracting more developers. If you if you compare Polygon, they have 37k plus D apps deployed over them. With Ethereum, there are 4k D apps deployed over them. If you talk about in comparison with the fees, Arbitrum is currently has having the lowest fees. And recently, Binance Smart Chain has launched its BNB JK BNB. So they are also coming in this JK world. Plus Solana is also working on this network issues. They have a good TPS of around, current TPS is 2800 TPS as compared with Ethereum that is 25 and ranges between 25 to 30. So it's not like they will survive, but I'll say they have a brighter future, because if you see the Ethereum roadmap to achieve 100k TPS, they have 3 4 major event like
Hmm.
the surge, verge, splurge.
Yes.
So it will take more than 3 years, 4 years, maybe 5 years also to achieve to those agenda. By the time this potential project that has been backed by billion-dollar fund houses, investment banks, or some big and chunky corporates, so they have time to popularize themselves. They have to steal the limelight, and they are doing so. Some of them already started doing this thing. So it's not
Hmm.
like they will not survive. I feel they will capture the market share from Ethereum, from Bitcoin as well, because they have the potential and they are satisfying the use case. They are giving the economical ways to develop apps and to transact. That is the main thing with decentralization. So if Ethereum is delaying those, delaying to address those issues, then they have the bright futures.
Interesting. So we'll just have to wait and see what this merge brings us, and where it goes for everyone involved in it. All right. So I think we can open the platform for questions and all. So I request if someone wants to ask Harsh any question on this related to this, we can go ahead one by one addressing that. Oh, we got one. Uh, so I would want to understand, considering the current scenario and the expected changes, when would be the right time to invest in Ethereum to get the most profitable result? Is it now or after the merge?
So
Interesting.
and you know what is happening? The retails are FOMOing with the merge news and everything. So I'm in this industry from 2016. I've experienced like all those major overnight event end up in a great sell-off. If you talk about that El Salvador adopting or legalizing the Bitcoin, if you talk about Elon Musk TV show about the Dodge, if you talk about the previous hard forks. So I prefer, or our analyst team also prefer, not to FOMO with this hype, because considering the macroeconomic conditions, even EU is experiencing with double-digit inflations. Even in EU, some corporates are planning to shift their offices to some stable areas because they have a fear of blackout. Plus, if you talk about Asian countries, China has recently uh, again they have break the what this for the COVID outbreak is happening, and they have
Mm-hmm.
some sort of restrictions again with 65 million of people. So there might be some supply shortage again, and there might be, we see fuel prices rising again. So if we combine all those factor, merge factor, supply factor, and the project development factor with the macro factor, it is not advisable to invest at current prices, because I'm expecting at least a drawdown of 50% at current levels, and it would happen because the borrowings are getting expensive. Earlier, at the time of the, you can say, bull start of the bull run, there was a rate of 0%. Now we are moving towards 3.2 to 3.5% of the federal fund rate, and maybe we would touch 4% or 3.75% by the year end. So liquidity pressure is very high. It's not advisable to invest at current prices. And we have already created a valuation model for what prices Ethereum is, with Ethereum could go. As per our valuation model, we are minimum to minimum, Ethereum may go to 500 to $600, and if we have some sort of positivity out there, it may went out to $1,000 to $1,800. So we have already posted this thing our Twitter channel as well. So I will prefer to keep quiet and to watch the merge effect, and you will get enough time. I believe we'll get enough time, maybe in triple digits, to buy Ethereum. Just advising not to FOMO.
Thanks. So I got another question. So how many miners or nodes we can expect to reduce after the merge?
So it's not like we are on the reducing side. So if we compare it with the proof of work thing, so there are currently around 19 millions sort of miners are and mining Ethereum. So if we went to if we compare it with the proof of stake thing, so currently there is 13 point I can say 13.6 million Ethereum stake, and the reward rate is 7 to 8%. That is pretty luring. I believe, and people are believing that once the merge is successful, then there is a huge, I can say, line of corporates, institution, fund houses to buy and stake their Ethereum. So the number will go up, and even not they and after this, after the successful merge, miners or the fund houses will own self become the uh, no validator rather than giving it to central authorities or central companies like Coinbase, Stake does, Rocket Pool. So this number will go up for sure.
All right. So I got a question. So it's a nice one. What will happen if there comes some technical glitch while working on the merge and the whole chain stops functioning? What will happen after that? I hope something not like Luna.
No, no, not exactly like Luna, because there is a $200 billion of economic activities is going on, maybe more than that. Because if we see the current market cap is around 205 billion for Ethereum. So it's not exactly that would happen. If some sort of technicality would happen, then they will continue to stick on proof of work, or they maybe try other attempt in times to come, because they have already tested in this thing in production environment. They haven't tested in live environment. Still, there are still more than 90% or maybe 95% of chances that we are successfully migrating to uh, the POS chain. But we should wait. We should not FOMO, and we should just watch the upcoming upgrades and technological improvements going on.
All right. So I have another question here. Will there be any price hike in Ethereum after the merge? If yes, what kind of price hike can we expect?
So I don't see any price hike, because I've already explained the narrative of the like historically all those events experience a sell off. But there is also uh, chances of a hard fork where we'll be getting ETHW. What happens? It's a free money for people who supports proof of stake. So they
Hmm.
will immediately end up dumping those, and once the dump started, so it would cause a cyclical effect. People will also start dumping Ethereum, like the original Ethereum in the POS chain, and it will cause a cyclical effect. Then all altcoin will start dumping, and Bitcoin. So I don't see any price hike, but there's still lower chances of a price hike.
Understood. Uh, all right. I have another one. I have staked my coins for Ethereum 2.0. When will I get my tokens back?
So I already answered this thing. Like we'll be
Hmm.
getting in by the once the some guy upgrade comes in. It may be 6 months from now, maybe a year from now. So they will release proper draft. What is the current state and what gonna happen, and all this thing would be happening after the merge.
All right. I think we can take one more question. All right. So, what will happen to my coins which are in my hard wallet, and how will I get a new one?
Sure. So there are two scenario to answer this question. So if we are talking about the hard fork coin, so if
Hmm.
you have the your coin at your hardware, so you have option to claim the hard fork coin. You can like in your hardware wallet is your non custodial wallet. You will just connect it with the MetaMask terminal, and you can just by inputting chain ID and by inputting the RPC terminal, you can get the access.
Hmm.
So it's like if you have hardware wallet, you can easily get your coin. And if the custody of your coins is with the centralized companies, then they most of the exchanges or companies are supporting the hard fork. Then you will be getting the things. But if we s- but the another thing that very few people know, that if you have staked your coin, then you won't be getting the hard fork coin, because your coin is already at beacon chain, and
Hmm.
you have uh, like, and you have the wrap tokens that you are already using in the DeFi ecosystem.
Hmm. Okay, let's do one more and then close the Q&A. Please write down it, and we'll try to answer it post the call. So this last question is: what happens to altcoins if things go south? How big will be the impact, and for how long?
See, I'm not very much optimistic at this moment, because everything is dependent on the macro thing. And if we have the successful merge, then we have to see in terms of security as well, like how the Ethereum is able to maintain its security. If we talk about the current structure, and there are reports that claiming that more than, I can say, a group more than 10 or 15 group of developer, or the uh, hackers, or from the other people who support other coins, are planning to launch some hard fork coins, or planning to participate in the hard fork with, you can call them as a fake hard fork, by using the chain ID, Ethereum chain ID, just to dupe user fund. So if any of these things can happen by any chance, or if there are any chances of slashing, if we experienced, then things will go very terrible thing. Or if any security concern arises by midway, or if any regulatory concern arises, so first we have to wait for a successful merge. And after that we should be seeing, like, the how the security thing has been impacting, what how they are tackling the social slashing issues, what about the relay transactions. And and after that, everything matters for a price bump is the supportive economy and the supportive interest rates. So there is not likely that we are experiencing a negative interest rate or the decreasing interest rate. So it's on the higher side, it's increasing, the market is on the terminal way. So if you talk about the long term point of view, if you talk about short term, there's a great sell off maybe happen in coming 2 months or 3 months, and maybe after this month also. But if we talk about a long term view, things will go green after first quarter or after second quarter. So there are still hopes, but we should continuously observe the project upgradation. We should also observe the Shanghai upgrade, and after like next upgrade, surge, verge. So things are greener if we see further years, not at this moment.
Absolutely. Well, thanks, Harsh. That was very insightful, very interesting, and if I think you have explained it very well. I hope the users have understood what you know the things you have said about the merge and everything. So thank you everyone for tuning in and joining us in the live session. I would request you to follow us. Also subscribe to our newsletters. We publish interesting news blogs and all, which will come to you weekly. And you can also visit our website. Check out that we have interesting reports and articles published. We'll leave the descriptions and details below. uh, and also we'll cover more topics like this, and we'll have more speakers on this on such topics in the future. So stay tuned, and thank you everyone. Thank you, Harsh, for joining.
Thank you, Dev.
Thank you.